right, welcome back everyone to another Wednesday real estate roundtable panel. Really excited to be back here. Hope you guys are enjoying these weekly updates. Again, reminder, every single week I'm posting on my Instagram, just looking for volunteers, people that want to jump on, chat about the Canadian real estate market. I've got a handful of stories. We've also got another great group of guests that will be discussing their real estate strategies, their opinions on what's going on in the current market and environment. I know lots of people have lots of questions, so feel free, if you're watching this live, jump in the comment section, hit us up with your questions, anything to do with real estate. We're happy to chat about it. Again, appreciate those of you that are smashing the like button, hitting share, because sharing is caring when it comes to social media. All right, we're going to start off here. I'm going to bring up John first. Hey, John, how are you doing?
Good. Thanks for having me on, man. I really appreciate it.
Awesome. If you don't mind, just break down for people kind of what's your exposure to real estate.
So I'm all Airbnb and everything Airbnb data related. So I'm actually the head of data for an investment fund. I used to have my own Airbnb company, but sold it during COVID. And I also have an Airbnb data consulting business and a couple of free Airbnb data courses on YouTube for free. So everything that's related to Airbnb data, that's me.
Awesome. So if you guys have any short-term rental questions, definitely jump in the chat, hit us up, and we'll try and get around to all the different questions. Next, I'm going to bring up Meng. How are you doing?
Doing well. Thank you for having me too.
And share with people just kind of your perspective and your experience in real estate.
I'm actually really pretty new to real estate world, but I've got I'm a realtor in province of Nova Scotia, and working with few investors and learning from few investors to evaluate bigger deals like 8 unit, 10 units too right now. And
Awesome. And next we've got Rees. How are you doing?
Hey, Matt. Good, man. Good.
Awesome. And break down for people, what's your kind of perspective and exposure to real estate?
Yeah. I got into investment probably when I was closer to John's age in my early 20s. Then became a real estate agent despite having a law degree, much to my mother's chagrin. And it's continued to evolve. We've got a team of 7 real estate agents that focus on income property sales in respective specific niches down in Windsor, Ontario. And my investment portfolio has grown from small value add to now larger value add, where I'm joint venturing with a real estate income trust to do larger developments, mostly in the downtown core of Windsor, where we desperately need residential density.
Awesome. Well, that's definitely interesting. Again, if you guys have any questions, I know Windsor is usually a hot topic on this YouTube channel. Jump in there, hit us up with your questions. I know a friend of mine was looking at a property recently that just went up for sale, and I was shocked to actually see it was like a list price of I think 170,000. I was like, that makes me think of a couple of years ago in Windsor versus the modern day. But next, we've got Jeff and Dakota. How are you guys doing?
Hello, fantastic. Yeah. Thanks for having us.
Awesome. Yeah, and break down for people, what's your background in real estate?
Yeah, so we're real estate investors. We've been investing for about 5 years now, mostly in the Ottawa area. Focus has been previously on flipping and secondary dwelling unit conversions, and we've just transitioned this year into the larger multifamily space. So looking at more of the 16 plus unit apartment building space.
Awesome. Well, I'm sure we'll get into a bunch of different questions around everyone's kind of strategies as well as perspective on the Canadian real estate market, because I know lots of people have lots of questions. But first, I wanted to bring up a couple stories just to share with the audience and get your guys' views on this as well. This first story from the Globe and Mail: real estate startup Properly chopped 71 jobs. And for anyone that's not familiar, Properly was one of the early kind of iBuyers here in Canada. So essentially buying large swaths of real estate and executing on kind of turning them around and reselling them. Recently, they also just raised another $35 million from investors like Bain Capital and Intact Ventures. I'd love to just kind of use this as a jumping off for everyone and get your thoughts on iBuyers in general, and how you personally or your clients are approaching buying real estate in this market. I feel like the strategies that we were maybe using 6 months or even like 2 years ago aren't necessarily going to be the same strategies that we're using today. Let's start off with John.
So interesting, because when it comes to Airbnb, it's all about just trying to find a cash flowing property, like the vast majority of the time with all the clients that I work with. And so even with the higher interest rates, essentially it's just become more difficult to find those deals, but they still exist. So what I'm seeing from most people is that they're essentially just waiting. Everyone's just kind of waiting to see what happens, right? Whereas the fund that I work for, we're just continuing our research to try and find more inefficiencies, more like better sort of niche areas where the real estate's a little bit cheaper, but there's still a lot of travel demand that's going on, right? And then on top of that, we're also trying to pick markets that aren't dropping as hard, right? So like there's some markets where they're just getting hit really, really hard, whereas other markets are still having like multiple bids on properties. And so we're trying to kind of lean towards those multiple bid areas, so we're not getting hit buying near the top as it continues to come down. So that's our take, and just sort of the general take that I'm seeing from my clients who are buying Airbnb properties.
And John, do you use any like particular rules of thumb when trying to analyze a property's potential?
Yeah, I use quite a bit. So I have like a pretty thorough process that I go through. Like the property has to actually let me explain. So like I use the Burger King logic. So McDonald's spends millions of dollars to figure out what corner to be on, and Burger King opens up across the street, right? So essentially I use the data to find all of the properties that have been up and running, to find which ones are working and what it is that they're doing that's working really well, and then I just replicate that, right? And we're essentially, sorry, I kind of went off topic there on exactly where I was going with that, but could you ask that question again? Sorry, I apologize.
Yeah, just what sort of rules of thumbs are you using when analyzing a property's potential?
Yeah, sorry. So we're using that logic to be able to identify which properties are the best. And then once we find a property that has the same bones as a high revenue potential property, we're then using a 20% rule. So we want the revenue to be about 20% of the purchase price. And if we can do that, then we feel very confident that it is going to be able to give us some cash flow when we actually purchase it. So if the home has the potential to make $100,000, we will buy it for $500,000.
Gotcha. And so that's like annual revenue, obviously, we're talking about there.
Yeah, annual revenue, including the cleaning fees.
Got it.
Yeah.
Yumeng, what are you kind of seeing, and what are your clients approaching when it comes to real estate investing right now?
I think in the investor side, I would say a lot of people who have been flipping for last 2 years and finding great profits. I think they're just backing out for now, and the investors who are still looking in this market, they're just being pretty conservative with their ARVs. So if the ARV is coming to, let's say, 350 or 400,000, they're like being pretty conservative with that, and they're they're seeing that it's going to be 10 to 15% less than what it should look like before, because of the interest rates rising and the price still going down a bit by bit. But in terms of like first time home buyers or people who are buying to live in the property, you still see a lot of property which are like 300 400,000, which is not normal for Ontario, but in here 300 400,000 are starting prices for a single family properties. Those properties are still being bid upon. People are still bidding on it because the affordability sink for everyone, and the people who are in the range of 500 600,000, they're buying properties worth 300 400,000 at the moment, I think.
Got it. And so as far as trying to be conservative when it comes in on determining that, after repair value, are you guys just really staying up to date with comps? Are you kind of baking in a margin of error? What does that look like?
So yeah, we're up to date with the comps, but instead of looking comps for like last 3 months, we were kind of trying to find comps for a month or 3 weeks. In the markets where there are no comps or there is not much activity going on, you gotta take the comps for 3-4 months as well. But yeah, you're basically trying to predict the future in a way where you're being conservative from all the sides, not only in terms of ERV, but if you are trying to get your repairs or the how much repairs it's gonna need, you are also trying to be conservative on that side too.
Got it. Jeff and Dakota, what are your thoughts?
Yeah, I mean, to echo a little bit of what Yumeng was talking about, that's part of the reason on why we're not really focused on flips and single family homes, it's really difficult to determine what that after repair value is going to be, especially coming from an inflated market and with the interest rates and everything affecting the overall value of homes today and the emotions and everything involved with single family homes.
Mm-hmm.
It's a big reason on why we've switched over into that multifamily space.
Yeah. And for us, looking in the multifamily space right now, the switch has really been getting more creative with financing. So I guess a couple of months ago, before the interest rates started to go up, we were more looking at, if we put traditional financing on this building, what is it going to look like? And now it's, can we assume a mortgage that the seller has? Can we,
from like 2020 or something
yeah,
like that?
Do they have a favorable interest rate that we can assume? Can we get a vendor take back on the property? Can we do an agreement for sale? So now, instead of really focusing on what is this going to look like when it's in traditional financing, it's now, what does this look like with all of these different creative strategies? So it's just switching how you're running your numbers and trying to get more creative on how you're going to finance this property, hopefully until things kind of calm down and interest rates, figure themselves out and you have a better idea of what's going to be happening in the landscape. So it's just getting more creative to get through sort of this weird period of time right now.
Got it. And Reese, what's kind of your thoughts in regards to approaching buying in this market?
Yeah, it's really interesting to hear people from the different regions and the different strategies adjusted to those regions. Because in Windsor, it would be different again, interestingly enough. What we've been encouraging our clients to do as the market has shifted, bear in mind, we went through, and I think a lot of communities went through this crazy, unsustainable property value growth between January 1st and March 31st. And we were literally telling our investor clients, which is 70% of our sales a year, we were telling them to hold off. Just because it 36% in 90 days in Windsor, Ontario was just insane. And sure enough, there was a market correction downward of about 23%. So you're still up over, I think, 13, 14% on the year, but you're back down to property values where you can actually make a cash flow. And this is important to understand. The rents didn't drop. So the property values have dropped, but the rents continue to go up by approximately 1% a month in Windsor. And that's not going to stop. I mean, you guys have seen the paper. I mean, Windsor's not just going through sort of economic growth announcements. Windsor's going through generational change. It's over. Windsor's population, by the time I retire as a real estate agent, is going to double. They have to double the power supply coming to Windsor in the next 4 years. And we already have such a heavy industrial base. Think of all the electricity we already use. And they have to double the electricity that's coming down here. That's how much is happening down here. And for real estate investors, what we're doing is reminding them of that, but we're also reminding them that they can actually get a cap rate again that we like as investors ourselves. So now we're all of a sudden, after 4 years of shrinking capitalization rate returns, you're now at a 7 to, I've seen as high as an 8.5 cap. And I know everybody on here now is going to contact me. I want that 8.5 cap. It happened once. But the fact it's happening again is a welcome relief to all of us, because you come to Windsor for cash flow. And so now you can cash flow again, even with these interest rates going up. The fact that rents are going up by 1% a month, and there's not supply and demand, guys, 800-pound gorilla in the room. There's not enough housing for rent. There's not enough housing for purchase. That is going to sustain us with both rental growth and property value growth over time. Yeah.
Got it. Yeah, appreciate your perspective there. And I see we've got a late add to the stream. Christian, how are you doing?
Hey, good. How are you?
Good. Great to have you on. And so if you don't mind, maybe just give a little bit of background for everyone on the stream. What's your exposure and experience with real estate investing?
Sure. Thanks so much for having me on the show. Sorry I was late. I couldn't figure out the link. But my name's Christian. I'm 25 years old. I live in Buffalo, New York. I do rental arbitrage. I don't currently own any property. I currently rent 24 units in Buffalo, and I run them all as midterm rentals. So I rent them I sublease them mostly to travel nurses and other traveling medical professionals, traveling business professionals, who are usually staying with me anywhere from 1 to 4 months at a time.
Got it. Yeah, appreciate you joining us. So,
Mm-hmm.
what I'd kind of like to explore next, and we'll just kind of go around the room, but I'd love to hear what's everyone's takes on your market right now, and what kind of one exciting opportunity or something that you're paying a lot of attention to where you think there's big potential. Because I know there's a lot of real estate investors right now, or aspiring real estate investors, that are sitting on the sidelines. They're kind of nervous to jump in. And I think a lot of people are looking for signals from their peers in regards to, what are you paying attention to? What gets you excited right now about deals? So let's start with John.
Appreciate that. So, most of the stuff that I do is over in the States. Like I do work for a US company and they just buy everything in the States. However, I have looked in Ontario quite a bit for short-term rentals and trying to find a good deal or a good buy, something that will cash flow. And just happened to have a conversation with a guy earlier this week from Ontario. And we were kind of brainstorming like where would be the best possible spot. And essentially what we came up with was that you're going to want to be in a place that has demand during the summer and the winter, right? And typically the first thing that probably comes to mind is like a snow hill. But the issue with a snow hill is that it's never really a summer demand area, right? A high in demand summer area. And so what we were kind of thinking of was more of a area where maybe there's a snowmobiling track, right? Where you can go and snowmobile during the winter, and maybe there's ice fishing or something along those lines. And so, and then also within a second tier market. So instead of Muskoka, it'd be like Kawartha Lakes, right? So you kind of get the home value a little bit cheaper, but you have a lot of summer demand, but you also have a lot of winter demand. And so that will help you get through the entire year. And then the way it'll kind of end up working out is the summer will cover all of your bills, and everything you get through the winter is going to be pure profit, ideally, hopefully, right? And obviously you might also have to do value add to be able to get it at a cheaper price so that you can, one, have that built-in equity just in case, but then two, to be able to actually cash flow with that property. And then the last thing that we were mentioning is you either want to go really big or you want to go really low, really small. And so if you're going really big, you're going to be hosting all the people from the cities who are going to be coming with their families. So like 3 different families kind of coming together into a really nice big place, just for like a family gathering over the weekend. And ideally, when you do that, you want to make sure that the common area is very, very large so that everyone feels comfortable while they're in there. So when you are selecting a place, if 2 places are both, 3,000 square feet, make sure to grab the one that has the better common space area in comparison to the other one, right? So if you're going to go really large, that's kind of the way you want to go. But if you want to go really small, what you want to do is do like a romantic getaway. So maybe find like a really small cabin and then just make it like the place to be for a romantic getaway for just a couple to go and hang out for that entire time period. And that'll get you through the winter and the summer. And that's really the only way I think you can make it work in Ontario with the prices of the houses right now. So that's my take.
Yeah, appreciate that. Yumeng, what are you kind of seeing people get excited about, or what do you think is a big opportunity right now in your market?
I think two different things. The Halifax, the Nova Scotia as a province, it has never seen this many people coming in at the same time. So the shortage is there in the main cities, but also in the outside the main city. We have a few markets like Truro, we have Bridgewater, we have Annapolis Valley, Sydney, all these markets. They've never seen this many people coming in. So there is huge opportunity in those markets to develop new units. In the main city, Halifax, Dartmouth, there is an opportunity to do a secondary unit or do a backyard suite. That is one of the things that the investors are focusing on, because the easiest way to create more supply is use the resources that you already have. Instead of developing whole new building, it's easier to have a basement that you already have, use it as a secondary unit. And the municipality is also supporting that decision. So they made it easier for you to even get a best secondary or backyard suite in R1 zoning too. So that is one of the things that I've noticed.
Yeah, appreciate that insight. Christian, in Buffalo, what's kind of an exciting opportunity going on in your market?
Yeah, bro. I'm really pumped up about midterm rentals. So basically, my entire business model is that I'm renting apartments that are walking distance from the hospitals in Buffalo, from the medical district in Buffalo, and then I'm basically subleasing them to the travel nurses and other business professionals that are coming to the area. So I'm really excited about, I think that especially in the next year or two, there's going to be a lot more demand for these sort of midterm rentals as opposed to short-term rentals. And I think you'll start to see this midterm rental thing become more like prevalent within the short-term rental space.
And so for people that maybe aren't familiar, when you say midterm, are you fully furnished, partially furnished? What does that look like?
Fully furnished. I'm basically furnishing these apartments like an Airbnb. And I'm still using Airbnb to find my clients, to find my tenants. But instead of booking for a weekend or booking for a couple days or a week, these are people who are booking for a minimum of 1 month. Most of them are booking for 2 or 3 months at a time.
Got it. Jeff and Dakota, what are some interesting opportunities or things you're seeing investors get excited about in your market?
Mm-hmm. I think the biggest thing going on in Ontario, I think in general, and then in the Ottawa market, is the intensification of a lot of areas. There was recently the announcement that you're going to be allowed to have 3 units on residential properties, which is an exciting thing that hopefully is coming down the pipeline soon. And then Ottawa itself is, I guess, pioneering or trialing a program that's called a 15-minute neighborhood. And this is something that's coming down in the secondary plans right now. So it's basically selecting neighborhoods that are close to, you get like check marks for if you have like a gym, you have groceries, you have, I think, a medical center, you have schools. So basically the idea is to have these neighborhoods walkable. So they're going to allow you to create more density in those locations where you have a residential property that maybe is a double lot, and now you can get 8 to 16 units on it. So this is something that is coming down the secondary plan right now that we're keeping our eye on. So that's going to create a lot of opportunity to take maybe even, for us, we have a duplex that we did the SDU in it, and there's a potential for that to be maybe 8 units when this comes through. So it's something that we're watching very closely right now, and it's going to create a lot of opportunity for a lot of investors.
Yeah, we're watching it closely, and I think a lot of other cities and areas are watching it closely as well to see how successful it is and then follow suit.
Yeah.
Awesome. Yeah, that's really interesting. Reese, what's kind of your thoughts on Windsor, and what do you see investors getting excited about?
Yeah, quickly before I answer that, to follow up with what Jeff and Dakota are saying, I actually just met with one of the local conservative MPPs last week because of some notes that I made for one of the chief administrative officers in the area as far as how to speed up the development process. But it was really interesting that they hit a note that they're very, 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 very serious about essentially forcing the hand of municipalities to create more residential density. Good. And you're going to see over the course of 4 years, they're going to continue to strengthen those powers reduce those powers in the building code to stop that stuff. For point of reference, I'm waiting over 2 years for building permits to bring about 200 units into the downtown core.
Yeah, I find Ottawa is very, there's a lot of red tape.
Right through the Western world, brother. Right through the Western world. We've got an American on here from Buffalo. He's playing my boys in the Detroit Lions tomorrow. You're going to lose, man. But I mean, I've heard like Miami and New York, etc., also 3+ years. Toronto's 3+ years. So anyway, there is help coming. Like, these guys are deadly serious on getting it fixed. The provincial government, at least in Ontario. Sorry, Matt, to answer that question. Much like Umang mentioned, and Dakota and Jeff, houses where you're adding additional dwelling units not only is sort of the sexy sort of area to invest du jour. For anybody who does value add at a smaller scale, it is by far the easiest to calculate and the easiest to sort of figure out what your returns are going to be up front. And there's a lot of room for error as opposed to trying to chase that classic fix and flip. Like, oh, I'm going to find that beat up house and just fix it up. No, like, you can't make money like that. You have to plan to add a mother-in-law suite. The cheapest ones are the ones into the basement. The second cheapest way is to add an addition on the back of the house. Third cheapest way is the way that I see far too many people talking about as a primary, which is putting the house in the backyard. That is the most expensive. I mean, if you're going to take a house and add 2 additional dwelling units, which is now allowed, yeah, then the second one can be in the backyard, right? But that should be your second one. Your cheapest one for profit is always the basement, if you can do that. And I mean, my wife and I do quite well in life, but every time we buy a house, we still add an ADU, like every time, right? Because my whole rule is, while we still have a mortgage, we're going to run that as an Airbnb, and it really, really cuts down on your expenses. So I do practice what I preach, but to me, that's where I would love to see more and more real estate investors focus, because you're not just making a profit, you're also solving a societal problem, right? Anybody can buy a duplex and rent it out. You haven't improved anything. You're making money, congratulations, but you haven't improved anything. We're only on this planet once. Here's an opportunity to reduce homelessness. Here's an opportunity to make rental more affordable, right? Everything else, and you get paid to do that while fixing up the neighborhood, because you probably just bought one of the eyesores on the block and raised everybody's property values. Tell me how there's a better way to make money in real estate than that, like right now, because there sure as hell isn't.
Yeah, appreciate that perspective. Jeff and Dakota, did you guys want to add anything there?
Yeah, I just wanted to add to the fact that if you're adding the second unit to the house, it's not only like you're creating more rental opportunities for people, but you're also making it very appealing to someone who's going to be buying that house later, because a lot of people can't get into their first property. So if they're getting into something and they're actually able to rent out that basement suite right away, that's going to make it a lot more affordable to be able to buy their first home. So it's making it more accessible to people who are getting into the housing market in a way that maybe they wouldn't have been able to otherwise.
Yeah, great point there. Quick question here for Christian from David. Do you find 1 month minimum stays a problem in a condo corp building? And I'm going to kind of expand this question just to in general. Are you dealing with condo corps when you're doing your re-rental? And if so, do you have any friction there? And then just one other perspective I want to share before you answer is for David or anyone else that's kind of curious, it's really going to come down, in my opinion, to the individual condo and your local bylaws and things of that nature. So make sure you really understand that before you just kind of jump in. But Christian, what's been your experience?
Yeah, so I'm not in any condos per se, but I am in a few different apartment buildings. For example, I have there is a 24 unit building where I rent 10 of the apartments in that 24 unit building. So it's certainly possible. And yeah, 100%. Like it's, and my, the building that I rent 10 units from, they happen to be literally 2 blocks from the medical district here in Buffalo. So it's really it works really well and it's a great fit.
Got it. And did you start off like renting one and slowly expanding, or did you approach the landlord and negotiate like a bulk?
So I started back in November of 2018. I started working more with ma and pa, smaller landlords, where I took 1 unit on at a time. But then now, like with this apartment building, I took on 7 at one time, and then I've slowly added a few more, and I'll probably end up renting half of that building in the next couple months. But so yeah, I started a few years ago, and I started smaller with like smaller ma and pa landlords, and then I've built myself up now to working with larger landlords and renting more apartments up at one time.
Got it. Reese, did you want to jump in here with anything?
Oh, and also quickly, go Bills.
Oh, go ahead, Christian. Yeah.
No, just go Bills. That's all.
No, it's okay, man. It's okay. I'm Canadian. This is a Canadian standoff. After you. Matt, I just wanted to add, just if you're going to play the short-term rental game in an urban environment, like you probably heard John, he was talking more about snowmobile tracks in mountains, right? Part of the reason for that, guys, is in the urban centers, especially with all the pressures on, there's a shortage of places to live. There's homeless on the streets. Look, if you've got a lot of homeless on the streets in your city, think about when they all popped up suddenly, like almost overnight in your neighborhood. It was when the vacancy rate went down to an effective rate of 0, right? And all of a sudden the landlords weren't really subsidizing the sort of social service network anymore, right? We could pick and choose our tenants a lot more. Even the worst slumlords could. And that's why, the most undesirable tenants ended up on the streets. Unfortunately, people that usually have mental challenges. But if you're in an urban environment where there's pressures on the housing stock, it is very easy. It's an easy softball for politicians to say, we're getting rid of all the short-term rentals so that people have a place to live. These places are always 30%, occupied, 70% vacant. Is a travesty. That's what happened in Windsor. So you've got to be very careful if that's your model. I would talk to John if you can. Where's John?
Yeah, and I think
I would.
A big
But you
aspect
talk
of
to
that
John
too.
about, staying rural, tourist areas and that sort of thing.
Yeah, a big aspect of that too is simply understanding where is your city council, right? And how is that narrative evolving? And if you're going to try and like be a large player at it, I think you need to be proactive. So you don't want to simply be reactive where you find out tomorrow that they've passed either some new bylaws, some licensing requirements or something like that that could essentially put you out of business. But John, anything you want to add there?
Yeah, whenever I talk to a client, because like I got started in Airbnb in 2017, and like most of the major cities hadn't put regulation in place yet. And so, what trend I kept seeing was that people would go into like a city, and then all of a sudden, 6 months later, there was regulation. Their whole business was gone, right? And so, what I always tell people is like, go to a city that already has regulation in place and has already figured out a way to manage and handle everything. And that's like a safer way to do it. You never want to go to a place that doesn't have anything in place. But on top of that, they can always change it, right? They can always make it more restrictive or figure out another way to get around it, to make it harder for you, right? Because they're just going to kind of keep making it harder, especially as this housing issue continues, right? So now, not every single place we're seeing that though. There's a lot of places where they're actually reversing it because it's against their constitutional rights. That's obviously in the States, but yeah, just like make sure you know exactly what you're allowed to do and what you're not allowed to do, and never get an illegal one, because within a short period of time you're going to be kicked out, and it's going to be a complete waste of money. So anyone who you see who's like, yeah, whatever, I'm just kind of forgetting about the law, like they're not investing their money properly over the long term. So just know your regulation really well.
Yeah, I appreciate that. And seeing how we're talking about it, this just kind of reminds me, I saw this article pop up, well, I guess it'd be over a month ago now, but from CBC News, more than 3,700 homes lost to short-term rentals across the province, Halifax Group finds. So I'd love to hear, kind of your thoughts here, Umang, on this. But quickly, my hot take here is this feels like there's a narrative developing where literally what Reese was saying, they're going to demonize short-term rental landlords here. And I think this will just be kind of the beginning of the arguments against Airbnbs and short-term rentals. My personal opinion here is I understand the logic people use to come to these conclusions, but I think they're focusing on a symptom rather than actually trying to solve the underlying cause of affordability and kind of our vacancy crisis. But yeah, Umang.
Yeah, I think I was just going to mention this. I've seen few other articles regarding the same issue, especially in the downtown area in Halifax. What a few landlords have done is for 8 months in winter, they're renting like a long-term rental. Then in the summer months, they're going to kick those tenants out and do a short-term rental for 4 summer months. And that was a big issue last year. And when I saw the article, I knew that the rules and the restrictions are coming and they were needed.
Got it. Yeah, I appreciate your perspective there. And I think was it Reese? You had mentioned earlier that in Windsor rents are going up roughly 1% per month, and we recently just got this from Korea. Average rents rise almost 12% annually in Canada. I'd love to hear, what are you guys seeing right now in your markets currently in regards to rent prices and their trajectory? And then any predictions for the next year? Do you think will we continue to see this trend? Do you think it'll become more aggressive with rent hikes, or do you think we'll see a plateau or rents scale back? And yeah, whoever wants to kind of jump in here. Yeah, Reese.
So we talk in terms all the time of about 3 years. We always look about 3 years out, Matt. After that, we find that it gets a little too inaccurate. But guys, right across Canada, people get it's so funny. It seems like when an answer is simple, people make it complicated. And when an answer is complicated, they try to make it simple. I don't know why why the human instinct does that. Right now, it's simple. It's simple. It's supply and demand. It is a cardinal, carve it in stone economic rule. It's macroeconomics. It's supply and demand. We don't have enough rentals. We don't have enough houses, and governments are scrambling and praying that we can catch up in 10 years. They're already admitting by their own projections, we're going to be short 10 years in Ontario, right? It's going to take us 10 years to catch up. And the federal government's doing what it's supposed to do. It's bringing in another 500,000 immigrants per year to fill jobs. We're short over 1 million jobs in Canada. And you have about 300,000 baby boomers retiring a year right now, right? And economic growth, 60% of GDP growth in a country is population growth. And if you're not punching out enough babies, you got to bring in immigrants, right? So you're going to have constant pressures especially in major urban centers where there's job demand, like Toronto or Windsor, for example. I mean, it's going to be a ground and pound game just trying to keep up as developers and builders with the demand. And that's going to drive up your rental rates. It's going to also drive up your housing costs. So you're going to have to pay attention to the balance as you do your cash flow analyses. But right now, cash flows, at least in Windsor, are rock solid again, 7-8%. And that's why it's the 800-pound gorilla in the room that's not going away is supply and demand. We don't have enough housing.
Yeah, absolutely. Appreciate that insight. Anyone else want to open up their crystal ball and kind of predict what we're going to see with rent prices in your markets?
Sorry, go ahead.
Okay. The one thing we're actually seeing in Ottawa right now is actually an influx of rentals. So it's interesting because I don't know if it's because there's a lot of people that are pivoting out of maybe a previous strategy for their home, or if there's a lot of people that are like renting out rooms in their house to try to cover an increase in their mortgage if they were on a variable rate or something like that. But in Ottawa, we're actually seeing a big influx of rental opportunities coming up. And some people are actually having to reduce the amount of rent that they're requesting to get a tenant in faster. So I don't think that's going to be the trend for much longer. I think, like was being previously said, supply and demand is going to be an issue. We're going to have a lot of people coming into Ottawa that are going to need rentals. So I think this is just a weird period where people are trying to scramble and figure out what to do with their properties. I don't think it's something that we're going to see for a long time, but it is this weird period that we've seen an influx of rentals and people actually having to reduce what they're asking. Whether they're asking too much initially to try to cover more of their mortgage, I don't know, but that's what we're seeing in Ottawa.
I think historically also really rent prices just follow this boring flat line that just goes up, right? Housing market's really fun to talk about because it can go up, it can go down, it can have a lot of good entertainment for like news and everything like that. But rentals aren't really talked about too much, just because it's kind of a boring line.
Mm-hmm.
Got it. And so are you guys changing up any of the ways you advertise your units when they come up, or are you able just to kind of keep moving forward?
We haven't had to get a new tenant in a property for the last couple of months. But that being said, we have one that's potentially coming up that I had posted about, and we got a pretty good amount of interest in it for more than I was expecting to get for it. Now, this is slightly outside of Ottawa, so I don't know if it's maybe the trend of people wanting to leave still and get more into the rural areas and not be in the Ottawa core. So we haven't really run into that issue as much, but yeah, it's just what we've seen in the Ottawa market, but we haven't had to experience it yet.
Got it. Mang, what's kind of your thoughts?
I think I was just gonna say, like, I remember 3 years ago, if you want to find a rental for yourself or your family, you can just go to Facebook or Facebook Marketplace or Kijiji to find it. in Halifax in Nova Scotia, there are no rentals in those platforms anymore. You don't even find a single room in there. So it's getting harder. But on the other side, until the inflation is there, also the interest rates are rising. It's hard for landlord to also afford the price for all the expenses and everything too. You gotta make sure that you understand both the sides here. So yeah, I think I definitely see it going up for next few years, or until the red tapes on all the rules regarding zoning and permits. If it's gonna take longer like this, it's gonna be the rents are gonna has to go up like this.
Got it. And we actually had a follow-up question here for you. What's kind of your experiences or your clients' experiences with I don't know if it's called the LTB there, but essentially like here in Ontario, we've got the landlord tenant board. What's it like being a landlord? Is it a landlord friendly oriented jurisdiction from like, how long does it take to do an eviction, things of that nature?
I think it's definitely not as bad as Ontario and Alberta in terms of the restrictions on landlords, but the timeline for getting your queries answered as a landlord, it's increasing in everywhere in Canada, but in Nova Scotia, I'd say it's like 3-4 months. It's still better than Ontario, where it's 9 months, and BC it's 5-6 months.
Got it. Yeah, Reese?
Yeah, if I can offer some advice to the audience on this, being an old dog that's been doing this for a while, I have and I'm a lawyer by background, right? So I've got a pretty good understanding of how the systems work and stuff. And I can tell you, and I said this before the current LTB crisis, I've been saying this for 20 years and have followed my own advice on this. I've never gone with all my investments and everything else. I've never had correction. I had to go to the landlord tenant board once because I had a law student as a tenant and they were using me for practice. And then they didn't show up on the day. So I had to show up once since I've been doing this since the age of 22 as an investor. But my advice to everybody that's listening is simply never go to, this is a cost benefit ratio, right? You got to think like Spock. You got to throw out emotion. When somebody's not paying you, it's not about you. There's a reason they're not paying you, right? There's a reason they can't pay you. They're not going to tell you that because they're afraid of you. If you start yelling at them, they're just going to go in a shell. But not only that, you bring that negative energy and put them into their shell, you're now the bad guy. They're now totally justified to not give you that rent, right? Because they're not bad. You're just showing how mean you are to me, right? You never play that game. You always treat them with kindness, believe it or not, which I know is counterintuitive. And here's the other counterintuitive thing. You pay them to move out. Paying them to move out is cheaper than if you're in Halifax waiting 4 months for the tribunal. What's the average rent out there, Umang? Like $1,500 a month on a 1-bedroom, something like that?
You got it, yeah.
So that's $6,000 gone. And you haven't even hit the tribunal yet. Now at the tribunal, they're going to say, well, sir, I'm not paying because I've got cockroaches, roaches, and I've got aliens coming in on flying saucers parked in the backyard, and they make me scared. And you're going to say, there's no flying saucers. And they're like, well, prove it, Mr. Trent. Well, I can't. There's no flying saucers. And they say, well, just come back once you can prove it. You're now gone another 4 months. That's out in Halifax. And in Ontario, it's 9 months every time. Right. The last time this happened to me, unfortunately, I had a construction worker renting off of me. This is back just as the pandemic was starting. And he picked up an opioid addiction from getting injured. And they put him on opioids and he got hooked. And all of a sudden he wasn't paying his rent. I treated him with kindness and he tried to make me the bad guy a couple of times. And I still treated him with kindness so he couldn't do it. And I ended up buying him an $1,800 SUV so that he could get to a job site out in Vancouver. And I saved myself tens of imagine now you're going into the pandemic where you can't kick out anybody. I'd probably still have him as a tenant if I try to go landlord tenant tribunal. Right. So I hope that helps a few of you guys listening at home. That's never go to the tribunal. Always pay the money to get them out. Give them at least enough money for first and last for them to move to the next place to be somebody else's problem. I hate to say it, but that's part of capitalism, baby.
Yeah, I've seen far too many landlords make it kind of a personal vendetta. And they're like, this isn't right? So I'm going to like, this is the hill to die on. And my perspective was always just to look at it as a business transaction, right? And as you were kind of laying out, what's the cheaper alternative available? So 100% agree with that. Jeff and Dakota, anything you want to add?
No, it wasn't productive. It's okay. I was just gonna say that says a lot about the LTV.
Yes, no, it's a very broken system. I think Ontario's, to the best of my knowledge, is probably the worst, or we're definitely in the top 1 or 2 here in actually probably like North America, but certainly in Canada. And again, it's important the same way that you need to go eyes wide open into short-term rentals and understand the rules and regulations around those. You should also understand the rules and regulations around evictions. What's a typical timeline to expect? And yeah, I've definitely in the past had some terrible tenants, and we would always offer cash for keys, right? And just trying to look at that as again, a smart business decision. It's not whether like, well, this person owes me money and I shouldn't actually have to pay out of pocket for them. It's simply don't have your emotions attached to your business in any way. All right, guys. I want to kind of open it up here with one last question. I'd love to hear, we're kind of rolling into the end of 2022 right now. 2023 is right on the horizon. I'd love to hear, have you guys sat down, set goals for next year? Any big plans, projects, things of that nature that you're looking to sink your teeth into in 2023? And let's start with John.
Yeah, so I used to have 15 Airbnbs there, rental arbitrage, and I used to manage them. But I have this really great skill where I can actually identify profitable Airbnbs anywhere, but I haven't bought any of these properties myself. And so for the past 6 months, I've just been saving and saving and saving, and I finally got to the point where I have enough to be able to actually go out and buy a property. So I am actually looking to buy a short-term rental in the United States because the prices there are just a lot better, and I know them really well. And so I'm going to buy a property in the United States, and I'm going to figure out the process of doing it, ensure that I do it really well and properly, and sort of document the entire thing on YouTube as well. And then once I've done that, I want to sort of open it up to doing joint venture deals with other people and start to learn how to do that a little bit better, and be able to prove that I have done it myself rather than just doing it with the investment fund. So that's the like main plan when it comes to real estate for me, and I hope I can execute it. And I'm speaking it right now, so now I have to do it. So looking forward to it.
Nice. And do you have like a specific market in mind that you're targeting?
I have a couple of different markets. There's one area. This is the Poconos, which is a really well-known place. It's just outside of Philadelphia, and the reason I like it is because of the value of the homes. Is you can buy something for like $350,000 there, and it's a good spot where there's a lot of value add that you can add to these places too. There's a ton of demand. So for my price point, I think it's a really good spot that I could start. There's also a couple of different spots around Florida that I know where you can get something for about a $500,000 that will also have a ton of demand. So those are the two main spots that I'm curious about. And then when it comes to doing some joint venture deals, I will probably be looking at the higher like $750,000 to $1 million properties, which you can find in Scottsdale, Phoenix, and a couple of other markets as well. That are stronger equity plays than anything else. So that's the game plan for now.
Awesome. Yumeng, what are your plans for 2023?
I think the game plan is just to make more connections, build new relationships with people or from all over Canada. I don't have any monetary goals or like plans to buy a lot of units, but yeah, just making more connections.
Awesome. Well, I'm a huge believer that, your net worth is directly reflected based upon your network. And far too often I find real estate investors, well, this is especially true of aspiring real estate investors. They decide that they're not going to meet anyone. They're not going to go to any networking events until they own a property. And I would argue it's literally the exact opposite logic. You're going to get the most value before you've ever even bought a property because everything's a net benefit to you. Everything you can learn through that process. So yeah, I think that that's fantastic.
Yeah, absolutely.
Awesome. Christian, what are your goals for 2023?
Yeah, I'm looking to take over the city of Buffalo in the midterm rental / corporate housing space. I'm looking to create the go-to or premier corporate housing company so that anytime that there's a travel nurse or a traveling business professional, we're the person that they call. They call us. So I'm looking to basically at least double the size. I'm reasonably looking to, by the end of 2023, can be at roughly 50 units in just Buffalo alone, and then after that, maybe possibly look at other markets and take over other smaller to mid-sized cities doing the same thing.
Got it. And one quick question kind of on your investment approach. Are you going like directly to the like placement or hiring agencies and talking to them, or are you just advertising?
So
and just kind
I'm
of
working
select-
on that type of that pull, or I guess that would be push type marketing. Right now, I get most of all my bookings are pretty much right through Airbnb or Furnish Finder, or I have some on VRBO, and I get some direct bookings. But that is the next piece. That's like a 2023 thing, is like start partnering directly with the recruiting agencies and with other like major corporations that are pulling in workers to Buffalo.
Got it. Jeff and Dakota, what's 2023 look like for you guys?
I realized after you asked that question that we haven't really even talked about that as our goals for next year. But I think we do want to get into, well, we're going to be building our multifamily portfolio. I don't have a specific number.
You just said one.
I did say 50 doors, but I wasn't going to throw it out there. Now I did. So
I'm actually
like John, you guys are speaking it into existence here.
Yeah, exactly. Now it's real.
Yeah, I'm hoping for more actually, but we'll throw out 50 for now.
Yeah. Conservative.
I think mostly in the Ottawa Valley area, and then we're also looking in Thunder Bay, actually, interestingly enough. So those are probably the two markets that we're going to be focusing on. And then we're also just starting to build out our property management company. It's going to run sort of within our acquisition, like vertically within our acquisition company. So we're going to be building that out in the next year as well, which we're excited about.
Nice. And as far as trying to find those 50 units, will you be like simply looking on realtor.ca? Are you going to be like proactively talking to real estate agents that kind of special in multifamily, knocking on doors? Any general thoughts on how you're going to go about finding those opportunities?
All of the above, but the knocking on doors is more sending flyers to property owners.
Yeah, it's hard to knock on doors for multifamily when they get that big, because normally the owner isn't on site. So we'll do flyer campaigns sort of direct to owner addresses, and then obviously like talking to realtors, talking to people who deal mostly in the off-market space. You never know, like there's stuff on market that is still a deal and you could still come out with a win on it, but a lot of what we're building right now is off-market deal flow.
Yeah, I think particularly in this market, there's a lot of opportunities with that. I think a lot of people looking to get into larger multifamilies, you're probably going to find a lot of sellers or potential sellers are going to be sticky on their price. But if you can get to them direct before a realtor's necessarily involved, I think you'll find it easier to create, creative win-win deals where maybe you overpay for the property, but you're able to get very favorable vendor take-back mortgages or second place mortgages or things of that nature. Just one little tangent here on the door knocking for multifamily. Obviously, you guys are right. It's very rare you're going to find a like owner occupied apartment building. But what we would often do is, we would literally like stake out a property that we thought had high potential. And we would just talk to every tenant that came in and out of the building until one of them would give us their landlord's phone number. And it was actually surprisingly effective. The first couple apartment buildings we ever bought were through that. And again, because we're able to essentially directly interact with the owner, we were often able to get more creative on the deals. And, I think the second or third apartment building we bought, we actually had like six months of no mortgage payments where he held the first place mortgage while we had the opportunity to go do some cash for keys, get the property like streamlined, get the rents up where we needed so that we could then afford his slightly more expensive mortgage.
Mm-hmm.
Beautiful.
And that's where you need to start what your brain needs to be doing, especially with traditional financing being where it's at right now. So that's a lot of what we're looking at is, kind of getting rid of the traditional financing brainwave and how can we make this work and how can we get closer to maybe their asking price, which maybe is a little bit inflated, but make them happy, but also make it that it's still a deal for us. So that's exactly it, is just trying to figure out how to make both sides happy.
Yeah, absolutely. Creating those win-win deals.
I might reach out to you offline about that staking out
We may have
and
to buy,
talking to the tenants.
buy a really warm tent.
I'm interested in that strategy.
We found it to be very effective. Obviously, we were strategic, so we weren't just like picking random apartment buildings. We were picking, we were often looking somewhere in the like 12 to 24 unit range at that stage of building out our portfolio, and those are often going to be like owner occupied, or not owner occupied, owner managed. And again, like if we saw that it was a property management firm, we'd reach out to the property management firm and try and talk direct. But we usually found the biggest opportunities for rent lifts often came from owner managed buildings where the owner had owned it for like a decade plus, right? And they'd got complacent because things were good. They were able to cash flow because they bought the property for a song a decade plus ago, but they weren't necessarily having their fingers on the pulse when it came to where market rents were. Like the one building in particular I'm thinking of here, when we acquired it, the owner was like, just so you guys know, I think you could rent out these units for $1,000. And in the back of my mind, I was like, well, we're projecting 1,400. So I certainly hope that we can do 1,000 or better. But again, some of those market inefficiencies often come from owner managed buildings.
Mhm.
Yeah.
Reese, what does 2023 look like for you?
I was just like, is Matt going to remember? Is Matt going to remember? Swing it over. Really quickly before I forget, Jeff and Dakota, anybody that's in a major city in Ontario, there is a company out there that creates, I think they're called the Red Books. If you send me an email, I can link you to the people that make it. But it's a database that's updated once a year of all the apartment building owners in the larger cities in Ontario. So it would definitely be in Ottawa because it's in Windsor. But that's what we use. And it's funny because you'll see people on the list that you didn't even know, like like the guy that did the allergy stuff for my baby boy. Dr. so-and-so is on there, and I called him up, and sure enough, he's interested in selling. I wouldn't have known, right?
The MPAC list, is that what you're referring to?
I don't know what the name is, man. I've had 4 concussions. I can't remember that stuff, but I've got it on my email for you.
All right.
Yeah.
Oh, really?
Matt, to answer your question, I'm staying the course on the larger sort of syndications that I've done with the real estate income trust partners that I have. And then one of the real estate guys on my team, he's only got maybe like a 10-year window left before he starts kind of hanging them up and retiring. So we're trying to, he's twice divorced. So we're trying to build a portfolio for him essentially from scratch again. So I'm JVing with him to help him get that one going. But these are all downtown core buildings where they're sort of crappy commercial buildings that we're doing change of use on the upper floors into residential. Now in downtown Windsor, that stock of available properties is gone. There was about six groups playing Monopoly. We were one of them, and we scooped up everything. So now the next step, you'll start seeing me do pre-submissions to the city to do developments from scratch downtown. And it's a whole new world, but it's badly needed. It's a pain point. We need the building. So if you're going to do it, this is the time to do it, and if it sounds like that's big and a long way away, I had to start pretty much from scratch. Didn't go bankrupt or anything, but I had to start pretty much from scratch again, global meltdown. So that was, I got back on my feet 2011, 2012 as an investor. So guys, you're talking 10 years, keep reading the books, keep taking small calculated risks. And Jeff and Dakota start planning 3, 5, 10 years in advance, because that's what wealthy people do. Yeah, I'm saying that with love. You got to have a plan.
I was just specific on next year's goals.
Yeah, man.
Awesome, guys. Well, again, appreciate everyone joining us for this panel. If you guys enjoyed this video, smash the like button, hit subscribe if you're new to the channel. Reminder, every Wednesday, 8 p.m. Eastern Standard Time, we're going live here with a handful of different Canadian real estate investors and the occasional American guest as well, discussing what's going on in our real estate markets. And if you guys have questions, hit us up in the comment section. Again, really appreciate our panelists joining us, and we'll see you guys next week, same time, same place.